Evening, guys. Welcome. Evening, afternoon, morning, depending on where you are. This is pretty intense background music for me, actually. Maybe this is going to be a bit more chill. This sounds better. Evening sun and MC. So plan for tonight. We'll take a very quick look at some of the crypto charts. It's not really a huge amount to cover off. I mean, aside from BTC continuation, right? It's not a huge amount to cover off. We'll flick across, take a look at some traditional markets, and then what we'll do as well is, like the whole time throughout the stream tonight, I'm going to be just chucking a lot more questions into chat. So I'll be chucking a lot more questions in terms of, what positions may we consider taking at this point? Like, why would we consider taking that position here? And a bit more of a viewer interaction friendly stream. So I'll be chucking a lot more questions over to the guys in chat, and essentially letting you do some of the work for me. Let's close down some of the stuff here. Try and make sure things are running smoothly tonight. All right, okay, cool. Let's kick off BTC. Continuation of the downtrend, obviously. No major changes in that. The only thing that we had, obviously, is yesterday we had this period of price action in here. Sorry, we were here last night. So here last night. Yeah, that's right. So here last night, got a small relief from that, and then another leg down. And what's kind of interesting about this, and what should be pretty noticeable, is that there's really been no signs of divergences, right? Like with this region here, we basically just consolidated until we had another leg down. So there's really been no signs of divergences. We potentially had a divergence here from this leg to this leg, but again, very quickly invalidated on the next leg down. So if anybody needs any confirmation of the strength of the trend, okay, the fact that we're not creating any major divergences on lower time frames should be testament to that fact. Even on the hourly here, okay, we're simply consolidating, okay, legging down, and then not making any divergences down the bottom. So this is just one-way traffic right now. There's really nothing else about this that is of interest on the long side. So let's take a look at some potential short regions. Okay. So let's start off by throwing the first question out there. So why am I particularly interested in these two regions on BTC? So this region here at 6.8 and this region here at 7,000. Why are those two of particular importance or interest to me when I'm looking to position short? fib ratio. It's not, but I'll take the confluence. I'll take the confluence if we have got some fib level. I'm assuming that we've got some sort of like 618 level here, around here, right? But no, not the fib. Yeah. So so from my perspective for this one, Mint, right? Sun's hitting the nail on the head here, which is supply. So in this region here, I know that we've got supply present, and obviously this region here, I know we also have supply present. So in both of these regions, we've had enough supply in order to gap down again, right, to continue these legs down. So both of these regions marked out here are of interest on the short side to me because they contain active sellers. So this region at 6.8, if we move back up to here and reject, then this is a good shorting opportunity. And likewise, if we have the strength to make it back up to this region here, then also this will provide a good shorting opportunity. So both of these regions for me right now are the nicest shorting opportunities that I can see. And then I think that relates down pretty well to the 15-minute as well. Okay, so former support, former resistance. So, holy shit, former support area here. Okay, and then obviously the breakdown from that. So there's a lot of confluence around these regions for me. Now, if I was to play devil's advocate, and I posted about this on Twitter earlier, okay, I think there is a crazy world, right, in which we can come up to 8K again. I think there is a crazy world where we can do that. Realistically, though, right, I can't plan for that happening. All I can say is that I would short 8K heavily, but I can't actively plan for that happening. We can see pretty clearly from this region here. Okay, let's delete the throwback and let's just take a look at this region. Right, we can see pretty clearly from this region here that we've had a pretty clear support and resistance flip, right? So former support, move way up into retesting this breakdown here, sell off, and then retest as resistance here. Okay, and then sold off from that point. So to think that 8K is a possibility, it may be a little bit far-fetched. All I know is that if we did get a sharp move up here, it would be a short for me. The only thing that keeps that in the back of my mind is something that may happen, okay, and this is purely from a liquidity perspective, is that the shorts haven't really been challenged in a while, but at the same time, we're aware of the presence of longers, okay, so we know how many longs are open on Finex, okay, and we know exactly who's opening them as well, by the way. So we know exactly who is in charge of those Finex longs. But essentially, we've had no real challenge. All of these shorts have really seen no challenge at all. Yeah, Joe. So so none of these shorts have seen any real pressure, which is why I think if we had that strong impulse move up to the 8K region, tapping our supply here, okay, which has been untapped so far, that is still a possibility for me. So I would absolutely not be bullish at this point here. If we were to break out and get ourselves back above here, then sure, I'm happy to consider the bullish argument in that case. But if we were to spike into 8K, this would probably be one of the best shorts that you could take. Okay, because again, the downside potential is pretty massive considering we are in a downtrend. So that's what I'll wait for. More out of hope than expectation. But again, just aware that we really haven't tried to punish any late shorters. Okay, so late shorting has been rewarded. Okay, and it's been rewarded for quite a long time without any challenge. The real issue now comes around this region here. And it comes from here because of this, basically. So this is one of the strongest buy-ups that we saw on the run-up. Okay, this region here when we dropped down to 6.3. this is one of the strongest buy-ups that we saw, and it was the last time we ever came down to challenge this level. So we know that longers here, okay, longers here, and any fresh longs that are opening right where we are, okay, are now going to be under pressure if price goes below this. So we've got a key region now here that if price starts to get below, we may cause some of the panic closure of long positions, especially this region here. Okay, the majority of these longs in this region have probably averaged out by this point. I'd be very surprised if this contained a healthy amount of longs that were still actively in positions and watch this come all the way back down. So I think that realistically this is the main region here, okay, and then obviously the fresh area here with new longs opening up. So for now, just pure continuation to the downside. Downside targets, we haven't really discussed downside targets in a while, so let's just quickly cover off downside targets. First downside target is this region here, okay, which is 5.5k. That's confluent with the channel edge. Okay, so if we were to come down and test the very bottom of this region here, okay, we're pretty much, and I'll leave this like this, we're pretty much hitting down here, okay. If we were to drop dead straight now, we come down at 5.1. And then a little bit of overspill to that to just under 5k potentially. The second region of interest for me is through here. Okay, and the more aggressive side. This would probably, I would be more confident in this region hitting if we were to visit 8k. I think if we visit 8k, I think that the downside is stronger than if we were to drop from this position here. And then this region here obviously takes us down to 4k, would retest the original origin of this last breakout that we had, okay, which was obviously the 2019 move up. And so would come down and retest this region. The other thing is, and again, I've covered this once before, and this stems from traditional markets, but what we have in this candle here is an inefficiency. And from a traditional market perspective, we tend to see inefficiencies filled in. And so for me, this inefficiency in here is also a target to potentially be filled in depending on the strength of the sell-off. So that's basically what I've got my eye on. 5.5k, I'm a buyer because I don't think I pass up on that opportunity. And then below that, obviously this 4k region, I'm also a buyer. And if we want to look at macro time frame, and again, some of the older group members will know this quite well, where I just paint this very simple bearish picture, okay, which is in the weekly time frame. Can we take it to the monthly? Actually, yeah, let's just take it to the monthly. Okay, it's just as clear here. So the monthly, very simple bearish approach basically says this. Okay, high, low, lower high, lower low. Right. So from a monthly or weekly perspective and a very simple market structure, this is a lower high. The expectation would be on a lower low, which would then take us down to the origin of this breakout, okay, which is pretty much around the $1,300 mark. And again, I don't really like talking about that one too much because that feels largely unrealistic. But at the same time, when we consider macro time frame structure, this doesn't look particularly attractive. So from BTC's perspective, it's quite valuable that BTC holds up in this region, right? Because it really wants to hold a low. So it really wants to try and hold this low down here, which is why there's a lot of emphasis placed on these regions from sort of 4K to 5.5 holding, because it really doesn't want to be in a position where this low is being challenged, because that would be a capitulation point. Okay, if we were to lose like 3.5k, right? Actually, if we were to lose, let's take a look at it on this time frame. put a very bold claim out there. So if we're to lose this level down here, okay, and we start to sink into this former accumulation range for the 2019 highs, I would put a relatively healthy bet out there that price would probably go from this 3.8k level down to under 2,000 pretty rapidly. I don't think we'd hang about in that sell-off, because this would just be pure capitulation. Can you imagine how many people are now under the expectation that 5.56k holds? Some people are still under the expectation that this is the bottom. Right? You imagine the panic that would ensue if we were starting to break down below 4k. Right? And the sort of bailout that we'd see from crypto as a whole in that situation. So again, that's just pure narrative. There's nothing really. I'm not sort of out here saying this is where we're going. Let's take a look at ETH very quickly. Cover off what's happening on ETH. It looks like absolute garbage. Absolute garbage. With ETH now, this just becomes the shorting spot at 140, and now we're entering a region down here. And we can see actually from the markouts that I had last time. Let me turn these all white to make them visible, and we can see what we've been looking at on a macro scale and see how that plans in. Now, we've had a bit of action since we first put this together, so we can check back in and see the position that we're in here. And pretty much what I thought would happen is kind of happening here. Let's take that line back up. Take that down here. So let's take this down to maybe the daily, which is where this began. And then I've got another box to mark in here that isn't this line. Yeah, so it's here. And then we can talk through this a little. Okay. So ETH on a macro perspective, what we've been discussing is the way that ETH had been reacting to a demand zone, which was down here. So what we had is at the base here of this rally up, we had an untested demand zone. And what happened is ETH sold off and it bounced from this demand zone the first time here. It bounced from the demand zone the second time, and it bounced the third time. Each reaction got weaker. Okay, so the first reaction was the strongest reaction. Here's the second, and then the third was slightly weaker than that. And then what happened is the fourth time that we visited this demand zone, we broke through it. There's no demand left. And we then flipped this as support resistance in this demand zone. So what we laid out the first time was that what would likely happen is that ETH would head down towards a fresh demand zone, right? Which is actually down here on a daily time frame. Okay, it's slightly more aggressive on a daily. So that's ETH heading down to around the $111 mark before we see any true bounce again. So once we hit this demand zone down here, then I've got the potential for taking out a small long on ETH. And again, I'm looking to try and hit this region up here at 140. If we were to hit 111, I think I could probably take out a small position here for a swing trade. But not looking very attractive at all. And then if we were to break down through this demand zone, okay, this demand zone doesn't hold, then essentially just what we're looking at is down here is this bottom. Okay, so all the way down here to $79 is where we'd be looking at next. And the concerning thing about the level at $79 is this region here. I don't want to clutter this too much, so I'm just gonna mark it out with a brush. This region down here was basically had its stops run by this wick. But this region here has some very clear levels that are just flats. Okay, so down here at this level, there's no run of this liquidity down here. So I think that if we do come down, then we probably at least pierce down to this $78 level again. but ETH's looking in a pretty horrific state right now. And I don't see any real relief on this until it hits this $111, $110 region. And then I think we may get a bounce from there. If we just look at some of these indicators which are representative of momentum and trend continuation, like just look at the weekly. So the weekly isn't even entering these sort of oversold conditions. This is purely showing trend continuation. So there's nothing here that says this is about to bottom out. We're just heading down. So we'll keep an eye on these, but right now they look pretty gross, both of them. XTZ is in a really rough spot. That's one that I wanted to cover off. Really rough spot here. Selling off. I haven't got a position on this, but basically my position would now be tailored by this. So I think any movement that we now get back into this region here becomes a shorting opportunity. So that's what I'm going to be looking for on XTZ, is a shorting opportunity on that breakdown of this former support region. So if we mark that out here, we're probably looking at something like this. Like, I'd need to give myself a bit of grace, but I wouldn't want to go too crazy with this stop. And then I'd aim for the low. Tomo. So this is finally selling off after taking a position on this. Whoever joined the stream early may have seen that I had this region that I marked out. And basically this is just a lower time frame support and resistance level that I would expect to now hold, considering that we've lost it. And the reaction here has been really good. I didn't check on this obviously till now, but this reaction here to hitting back into this is a really good sign for me. So I'm really just looking now to take this trade all the way to target. What's the move that we've already covered here? Because this is a relatively nice move already. Yes, this is already a 13% move. So really happy with the way that this is playing out currently, and I think that this just rolls over all the way back down to this origin level down here now. It's broken market structure. So for me, this is just a rollover back down. Let's look at ADA, because ADA's one of my favorites. So the nice thing about ADA now is that we've taken out this former low, which was here. Okay, really, really strong low this was, because we recovered all the way back up on the daily, whereas now we've just seen price come back down and just crucify this level. This marker here is down here at this very origin candle of the move up. So we've now tapped into that. So this is purely now waiting for a reaction. I'm just going to monitor this, wait for a reaction, then decide how I want to play ADA. Some of the tokens are looking in pretty terrible shape as well. I was chatting with somebody earlier about OKB. Really rough 12-hour sell-off for OKB here. But OKB essentially looks like it's just rolling over in one big rollover. And the downside again is huge from OKB here. It's just going to enter price discovery. Negative price discovery. EOS covered last night, but basically not a buyer until 185. Super simple on EOS. 185. Is there anything else that people want to quickly check over before we move on? I'm gonna throw up some different charts here and kind of take the group's opinions on it. And the important thing for me is I'm going to be going into some traditional markets when I look at these setups. Now, the purpose of this and having the discussion with you guys in chat is not about the asset particularly. It's more about the setup and the idea behind what you would do in the situation. So I don't want you to sort of get distracted by the fact that it's a traditional market asset. It's a stock. I just want you to consider that this is a this is a potential like data set that we can just use and have a conversation around, and get some different thought processes on how people feel about different assets on a range of different time frames. It's just a nice activity. Mon says TRX. Yeah, death. A lot of alts and like BTC and ETH today lost these major levels, right? I think realistically, Mon, I think that obviously now this is just heading down for low take here. Tron will do well if it tries to hold a 12-hour daily divergence. It will do extremely well if it can do that. But I really just expect a challenge to the lows. And again, below that, things just get real stinky down there. Real stinky. Like if this weekly level goes, I think that the only time that I could consider longing this is obviously if we have a wick that clears it on the weekly and then recovers back. I think I'd maybe consider taking it there, but yeah, looks pretty grim. Because TRX is holding up really nicely, so this is really grim. Obviously now just fresh lows created here, so not pleasant shape at all. BTC rough as shit. Seal. Yeah, let's throw Seal in. Yeah, so I mean, like, Seal looks as though it just wants to go again. Yeah, Seal looks like it wants to go again. Volume is up again on the breakthrough candle, which gives me some added validity. So I think right now MC Seal looks in pretty good shape to continue this move up. Right, add to its 3,000% increase. I'll just keep one eye on Tomo as we take a look at some other assets. I'll keep an eye on Tomo, and obviously we'll keep a check in on BTC. But let's take a look at some traditional markets and kind of have a discussion around the other end of the scale when we're looking at things that are in a primary bull market, and then we'll play from there. Okay. So the first asset I want to look at is AMD, and we'll look at this on the daily time frame to begin with. Maybe the 3 days is going to be better because of the data. Okay, so this is the current state of AMD. So my first question is to everybody in chat: is what position do you want to be in on AMD? Like, if you're looking at this chart. Right, and let's put up RSI as well, because I think RSI is going to be helpful here. Okay, so we can hide mine. Let's just remove it for now. So when we look at this chart, apologies. When we look at this chart here. Let's get some thick RSI going so you can see everything. Like, what are your thought processes around what do you want to do to this asset? Do you want to long it? Do you want to short it? Like, what are your initial thoughts when you see something like this? And again, there's no wrong answers for anybody contributing. Like, it's just to open up discussion. Yeah, so Sun, like I really like that answer, right? It isn't an uptrend. Yeah, very good. Very good. Very good hand. So it isn't a crazy strong uptrend, right? I mean, like, look, 2016, right? We're just in a crazy, crazy uptrend. So Edgar says Big R is in the short. Like, yes and no. Like, I don't really agree that it's in the short, right? I agree that I think it's in the long. But we'll take a little bit of a further dive into AMD. Like, I definitely think there's a short play here. I just think it's management of expectation. I mean, it may as well be a shitcoin, right? So it's really in expectation here. I think that Sun has the right idea, which is scalp short and then look to position long, which is right. And I think that draft is also correct around the $36 region. I think that that's a particularly important level for AMD here. So that's one thing, okay? So let me zoom out to the monthly, okay? So take a look at the monthly. Does that change any of your mindsets about what you want to do here? Does the monthly chart, I mean, use RSI if you want to use RSI. That's not like a hint either. But does the monthly chart change your perception on this at all when you see this on a monthly scale? Okay, cool. So, a couple of different answers, which is really good. So let's go through these in order, right? So Mon, there's crazy divergence across a lot of time frames. It's for short. If it isn't, then I have something wrong in my analysis. So it's a relatively strong point, right? It is diverging across a lot of time frames, but BTC has also diverged across a lot of time frames. Right, the trend is king. So whenever we're in strong uptrends, strong downtrends, and we get a divergence that's the opposite to the trend, if it's a strong trend, a little bit like Matic, and I showed this example to somebody the other day in a one-on-one session, right? We were looking at the strength of trends, and we looked at Matic. And we were looking at Matic because Matic painted a lot of divergences, right? So Matic painted divergence across here. Okay, Matic painted a divergence across here. Right, and then both times the response was simply a small sell-off here and then continuation of the trend. So I think that the main thing about this is when an asset wants to trend up, okay, the trend is going to be king. So that's what we focus on, is that the trend is king, and that a lot of these divergences that are counter trend are just either so quick in terms of how they play out that we don't recognize them as such and we don't take profit soon enough, and we've lost our opportunity. Because what tends to happen, right? And Matic again is a very good example of this. So if we look inside these regions, okay, let's say we shorted here because we had this divergence and we decided now is the time to short. What happened very quickly was, if you didn't take profit, okay, very quickly this puts you back at entry. And the same here, okay? If you were choosing to short this, Okay, you didn't have that strong a move down, and very quickly you were actually above your entry. So whenever we're taking divergences that are counter trend, we need to understand that we need to be out of those positions as soon as the market gives us any form of sell off or buy up. Right? Because we're just going to get absolutely destroyed in our positions by trying to hold these longer than the trend says we can hold them. And the same is true for AMD. Like, I've shorted this twice on very low time frame scalps. But the idea is that basically these divergences don't matter, because once we get a sell-off, we basically need to close up pretty quickly. Now, when we're looking at the monthly time frame, we've got a slightly different picture for that, because the monthly time frame is a far wider data set for us to review, okay? And some of these levels are far more significant on a monthly perspective than we can access on crypto, which is why looking at traditional markets is a relatively good exercise, because we have access to all of this prior data. So when we look at this top region here, Mon, I think you're right. Like, the divergences mean that we want to short this. We're also aware that AMD tends to have these really strong cycles and really strong sell-offs. Okay, so like, is it possible that we're just in another cycle? Now, the problem is with this is you'll have divergences, Mon, as I know that you've seen, okay, and on lower time frames as well. But look at the last tops on AMD, and we'll just take a look in this region here. So this region here, once we hit the top, a little bit like we have done now, right? Once we've hit this top level, it took us 3 months before we sold off. Now, have you got the patience and the discipline to take a trade and then hold it for 3 months until you get movement? Because if so, then you're probably okay trying and short this region up here. Okay, knowing that we may go a bit higher, but you may be underwater, but you've got this divergence on your side, so you will eventually probably get a sell-off. But this took 3 months of consolidation before it sold off. Now, if we dive down to the daily level, and we take the last top up here, okay, again, we can see lots of consolidation around the top peak. Okay, and then what did we get? We got this failure top here. So ran the highs and then sold off, and that was our top signal. So for me on AMD, I think draft is along the right lines, right? Is what I want to see is something similar. So I think we'll see consolidation along this top region here. I think we'll see some chopping about here. And then what I'm looking for again is that failure signal. So give me that signal that says I'm exhausted. Here's the top. And that's where I'll look at getting into this. And I think the draft's right when they say that there's no weakness yet, because I think that's exactly it. Right, we are still in a very strong uptrend. There is no weakness really demonstrated as of yet on this. Even RSI, okay, comes down, cools off, and then goes for another leg again. You know, this is the exact opposite of crypto markets right now, where we are just literally pushing higher and higher and higher. Exactly, Edgar. So we're looking for some sort of SFP up here, and we're looking for some clearing of the highs. So this is something that takes time. So Mon, I think you're exactly right, and Edgar to some extent right as well, right? Which is that there is decent reward to be made by playing the short side. The thing that I think is the problem with that approach is that I don't think that a lot of the time we have enough patience in order to see that out. So a lot of the time we don't have enough patience to wait for a swing failure pattern to play out, or we don't have a lot of patience to literally just short up here and then wait. So we probably lose a relatively good trade or get stopped out of multiple trades because our stops are too tight in this region and we don't have the patience and the discipline to wait until we get a full sell-off. And then Sun, I think that that's also a very good point. Okay, if we look at the previous history with monthly RSI, we've tended to respond to monthly RSI being overbought a multiple of times. Okay, so every time that we do hit this overbought region, we do tend to see a sell-off. So again, the past data shows us this. Yeah, Edgar, it's a very good point. Like, our attention span in this is relatively low, and it applies across like a range of markets, but it applies just the same to crypto, because we get distracted by other things. We change our ideas. We dive down to lower time frames. It's one of the major difficulties with being a swing trader. So when you're trading and you want to have a trade that's going to run over a couple of weeks, a month, 2 months, right? A lot of people struggle with a discipline around that because it's basically like ADHD. Basically get like distracted by something else. We're like, holy shit, I'm all in short BTC, but it's not moving quick enough, so I'm going to hop over to ETH and try and long ETH instead. And then you find that BTC moves in the direction you wanted, and then like it's just like a whole thing, right? So I think you guys have the right idea about AMD. Okay, I'm certainly in that position as well. I'm certainly in a position that says I want to try and short this. But I'm also aware that I've got to have the patience in order for that to happen. So again, the other thing that I'm watching here is that this level has been taken. So these former highs have been taken. So I'm waiting to see if the monthly drops down. Mon says, so in a strong uptrend like that, even if you spot a divergence, wait for a ranging top before shorting. I was looking at the top wicks and divergences. I didn't see AMD clearing the previous highs. Yeah, so again, two things to that. Number one is the second half of your point. Okay, let the market tell you, right? Don't try and anticipate whether or not you think it will or won't clear previous highs. So let the market tell you that, and kind of just let it run, let it play out. And then the second thing is, and this is the answer to the first half of your point, is patience. Okay, we're never in a rush to short an asset or to long an asset. Never ever. We don't need to snipe these exact tops, okay? Because if our analysis is correct, then we will manage to get ourselves into a trade, okay? But we never need to snipe the exact top to be profitable. In fact, we're probably going to be less profitable by trying to attempt to get tops. And again, just look back at previous data, man. Like if we look at AMD, like I said, the previous top, okay, all the way back here, right? Look how long it consolidated for. So what the natural instinct to do is basically to do this. It's like, shit, AMD's hit these highs. I want to short it. We've got a divergence here on the daily. I really want to short this. Okay, I'm going to short here. And then like a bit of price bounces round and you're like, okay, I'm going to close this trade out because it's been 3 days and we haven't sold off now. So you close out your position. And then you're like, okay, we look like we're breaking down. I'm going to short again now here. And then price comes up and you're like, okay, that was a failed trade. Didn't manage to get in on this. So I've now been stopped out twice in this position. And then what probably happens in reality is by the time we get this swing failure up here and this exhaustion point, right, you probably completely forgot about AMD. Right, this is 3 months on. You've probably completely forgotten about AMD and that this is what you were trying to do. Right, you probably just ignored this, and ever since that you've been trading Wabi on Binance. So the reality is that these tops develop over time. There's never a rush to get into them. And we simply have to bide our time and wait for that opportune moment to get into the trade. But first and foremost, don't fight the trend. Okay? Don't fight the trend. Let the trend take you in the direction. We've got this like weird thing as traders. And especially as crypto traders, I think it's almost like enhanced this feeling. But when we look at a chart like this, when we look at a chart that is looking exactly like AMD, I can guarantee you, almost like with 100% accuracy, I can guarantee you that when you look at this chart, your first instinct is that you want to short this. Because immediately what you see is price has gone up way too much than I think it should have gone up just by looking at this chart. And therefore, I want to short this asset, right? I can guarantee the majority of people look at this chart and say, I want to short it. Rather than, I want to long this asset because it's done $9 to $42 in a year and a half. So there's something like inherently when we look at these charts, and as I said, I think crypto plays a part in that because these assets are so volatile. Whenever we see strong price movement to the upside, for some reason everybody's mindset goes towards, this would make a good short. So we want to play the trend as long as possible. When the trend tells us it's exhausted, then sure, we'll play a short. Bad says, I've been screwed by straight up shorting divs without considering trend. Yeah. Yeah, divergences that support the trend, incredibly powerful. Divergences that counter the prevailing trend, weak, less likelihood to play out, far better suited to scalping. All right, let's hop on to something else. Okay. First question, do we want to long or short this asset? That's a pleasure, man. And I'll expand on that. Okay, while people answer whether or not they want to short or long this, I'll expand on that, Mon. What divergences tell us, okay, is when there is a disparity in price action. So when there's a difference in the underlying strength. Okay, so when we see these bearish divergences or these bullish divergences, it gives us an indication about what is the underlying strength of the asset. Now, the difference between that and what Renko does is that Renko, especially with a momentum indicator like the Awesome Oscillator, it's showing you when the momentum is drying up from the trend. Okay, so that's a little bit different. So when we see divergences, because technically what we're doing is whenever we're playing AO moves, right, on Renko, is we are directly countering the trend. But what we're doing is we're taking an educated stab at when we think the trend is about to flip back over. Whereas RSI divergences are a little bit more temperamental and obviously can be invalidated a lot quicker than some of the Awesome Oscillator divergences, especially when using Renko. Okay, so Draft says, don't want to touch this. Jimmy says volume's too low. Mon says volume's low. Draft says maybe if it flips $8. Sun says, if anything, I'd be long. So again, without trying to sort of like call you guys out, right? Like why did none of you answer that you wanted to short this? And again, it's not like you guys are wrong, right? It's just a mindset thing. It's we see an asset coming down, and we want to long it. We don't want to join in shorting. So it's at a massive supply zone. It's at a big supply zone. I mean, potentially. Yeah, potentially it is. Yeah. So if we follow the trend, then we definitely want to short this, right? There's also another problem in this for me. So a few people had recommended this to me. So I think that Draft's right in that this region here needs to reflip in order to want to get into a position on this. It's close to the 6 demand, yeah, which is going to be down here and across this region. Yeah, which again is like potentially true, right? Potentially true. But then at the same time, the strength of this downtrend, okay, eclipses the uptrend. So this strength of this downtrend is far stronger. And if it breaks down through this level at $6, right, then there's just a huge gap. Right, there's basically a huge gap down here. So once if this were to go here, this whole region, down to $5, then this would just free fall down to like 280. So for me on this, I think that again, sure, we can look at positioning long on this, but what do we want to see when we have an asset that's selling off? When we've got, and I'll throw this to everybody in chat, right? When we've got an asset like this, okay, that is in a very strong downtrend, but we want to long it. Okay, so we're aware of some of the things that you guys have picked out on, right? We're entering a potential demand region. We're entering a previous region of historical support. What do we want to see in order to put a long position on this? What do we want to see to be able to feel confident that we want to buy this stock, right? What are the points? And if you guys can come up with 3 points, right, on why we'd want to long, then I think that would be good. So 3 reasons the chart can tell us to long. So 3 things that we're looking to see in order to want to long this asset. Let's change that. CBS says longer. Yeah, don't ever listen to me. All right, okay, so let's add in this as a 6th, right? Potential EMA cross, right? There's potential for one as well. So bad wants a clear rejection candle on demand, right? So when you say a clear rejection on demand, do you mean do you mean a candle that clearly shows that demand was present, right? So heavily wicks up, and then a flip of SR, right? So when people are saying a flip of SR, okay, and I know what we're referring to here. Okay, so let's change this. Let's change this to, this definitely isn't 3 anymore. So let's just change this to things we want to see. And so essentially what people are saying are this, right, is this. Is what people want to see. Okay, so next question. How many of you that contributed to that list of 7 things that we have on screen of what we want to see? How many of you actively mark out those things on a chart that you have or in a journal that you keep up to date? How many of you will actively map out the things that you want to see happen on an asset on a higher time frame that you want to see when you enter a long position or a short position on it? How many of you guys would write a list like this and leave it on a chart? Okay, so I guess it begs the question, why not, right? Because you guys came up with all the right answers of what you'd want to see on a higher time frame in order to long it, right? And the reality of the situation is that this isn't going to happen overnight, right? This may happen into January, into February, right? So, but this is still very important information, and it's still stuff that you took the time to assess and look at. So if you have this mapped out on your charts, then anytime you're flicking through your charts, you'll constantly have a reminder of what you want to see. Okay, so you'll have a very clear reminder of, oh shit, when I looked at this back in December, this is the stuff that I wanted to see happen. Right? And then actually you may look at it and you think, oh shit, actually we're at $8.22. And that's exactly what I wanted to see as point number 1. Right, so then this raises this up your watch list. So I think if you guys aren't doing this sort of activity, where you're keeping track of some of the higher time frame things you're looking at, because like you've just said right here, right, in this chat, every one of you has basically contributed a very valid point to what we'd want to look for in this. You've contributed something that would tell you on a higher time frame that potentially we are at the point of a trend change, right, with some really nice upside potential. And so there's no reason why any of you shouldn't be putting this onto a higher time frame chart to keep yourself constantly reminded of some of these key things. So again, you are all demonstrating the fact that you have the ability in order to assess a chart, especially on a higher time frame, in the correct way. But then again, I'd argue that from a discipline perspective, a lot of you probably would forget about this because it wouldn't be marked anywhere. So add this into your repertoire and your tool set of things to do, and I guarantee you that when you start flicking through your higher time frame charts, this sort of stuff will become invaluable to you. Let's flip back over and take a look at BTC Open. So that level on Tomo still holding, but again, just need to keep aware of this. Okay, so let's take a look at another stock. Let me have a think about something that. Okay, let's look at Tesla. It's annoying as well because all of the charts that I load up, I'm like, oh shit, I've got a load of scribblings on here and I don't want to give anything away. Okay, so let's look at Tesla on a weekly perspective. Okay, so again, first question, what do you guys want to do? Do you want to long or short this? Remember, weekly time frame, and I'll give you the RSI as well. Yeah, how's it going? No coiner. Okay. Okay. Cool. Yeah, really good answers. Really good answers because there's a lot of differences between each of you, which is really good, right? So so we've got long, short, watch for reaction, scalp the range, lots of traps into supply, could break through. I'd wait to see if the level would flip. Okay, so like there's a lot of good points in here. And again, there's a lot of looks more bullish though. There's a lot of like very good points in here about what this could be, right? Like bullish, bearish, long, short. Like what do we want to do? So let's go down to the daily. Okay, so let's take a look at the daily. Let's focus on this area in particular here. What about seeing this? Does this change your thought process at all, or are you still kind of the opinion that this is how you originally saw it on the weekly time frame? Okay, so let's ask this question. Okay, so let's map this, and then let's say this. So if we assume that this is resistance, all right, then what do you think about this? Yeah. So we've got 1, 2, 3, 4, 5 rejections of this resistance. Okay, so MC says longing a retest. of the broken resistance. Yeah. I think that's definitely a plan. So I'll give you my thoughts on. I sometimes get confused on whether this means a strong resistance or the fact that a fourth time means strength. Okay, so I'll give you my thoughts on Tesla, and we'll see if we can come to some sort of group consensus on this. Okay, so we've also got a support level that's down here. Okay, so we essentially, what we were on a daily time frame is we were trapped inside this range. Okay, this was our range between 240 and 380 is basically our range on Tesla. Very volatile stock, okay, very volatile asset. Along with AMD, it probably makes up a couple of the most volatile stocks that you can play. So this set out our range. This down here is a deviation away from that range. Okay, actually cleared all of this liquidity down here. So a pretty brutal run down to clear out this original entry point to the range. And then move back up. So from my perspective, and this goes to answer your point, No Coiner, right, is this tap on resistance, to me, just indicates strength. It basically, the amount of touches that we've had here, I would expect this region to now not act as a strong resistance. And if we consider that essentially, I kind of dislike referring to things as resistance now, so I'll refer to it as supply instead. Okay, because at this region, what we know is that every time that we've hit this region, there have been active sellers who have pushed the price back down. Okay, so we know that this is a region that sellers want to sell, and that we're now in this region again. Now the problem is when we have supply, okay, if the supply at this region is 100% full, okay, by the time we get to this region, the supply is now only 75% full. Once we hit it again, we're only 50% full. Okay, and now at this point, we're only 25% full. So every time that we hit supply, what we do is we essentially take away sellers, because more sellers have an opportunity to fill. The other thing is that from a short perspective, this has been a very profitable region to short from, right? So every single time, this has been a very profitable region to short from. But if we keep on making it into this area, as a shorter, it doesn't make sense for me to keep on shorting here. Because if price keeps telling me it wants to go higher because it keeps on revisiting this area, so we know there's demand below, then it doesn't make sense for me to sell something at $380 when I may be able to sell it for $425. Right? So every time that we hit into this region of supply, we reduce the number of sellers that are actively in this position, because this region becomes less attractive to me to sell into from a simple supply and demand perspective once we hit into it multiple times. Because people below me are telling me I'm happy to pay higher prices for this, and so I will let them pay higher prices and I will short higher up. Right? That's essentially the logic that we see taking place here. Okay, so this constant breakdown into supply is basically chipping away at the active sellers we have. So a little bit like Draft mentioned, what I'm looking for is there an opportunity that we're going to take in order to run all of these highs? Because again, we know there's liquidity above here. Okay, we know that there's lots of short sellers in this region that have been unchallenged. So what happens when we push above here? Okay, is that we see a lot of these sellers closing out of their positions, and we see a lot of breakout traders enter. So I highly suspect that Tesla will finally break this level. And then also, as Draft said, then the key decision comes from what happens in the aftermath. And this is why when I did Charles's podcast, I mentioned that the money isn't really to be made in the original moves up. It's to do with how we position ourselves afterwards. And this is a really good example of that, because If we push this to the upside and we come down and retest this, okay, we're aware of this being former resistance. So if this now acts as support, then we've got ourselves a very good long position here. And on the flip side of that, if this comes up, fails, takes out these highs and falls back into this region, then we've now got ourselves a very nice short position because we know we've swept the liquidity. So in these instances, this is something a little bit different to the way that we were looking at Kronos before. Is that this is a market indecision point. Okay, and so what we're looking for is a attack of the highs, reaction after the highs are taken. 3, if resistance flips as support, long. If the highs are swept, okay, so like this is a little bit different to Cronus, right? So what we're aware of now on this higher time frame picture is that we are marking this as a market indecision point because we know exactly where we are, but we've assessed that because of the strength of this move up again, okay, the sixth touch of this region, we're not as comfortable shorting into it from this supply perspective that we discussed. At the same time, we don't really want to long into it because it is still resistance until it's broken. So then we look at our plan afterwards, right? And our plan afterwards is if resistance flips as support, okay, so we get a retest back down here, then we want to long it. However, if the highs are swept and we move back down into this region, then we want to open up a short position because this is failure. This is a sweep of the liquidity and this is a failure point. Does that make sense? So just spending like 5 to 10 minutes going through some of the higher time frame pictures for some crypto markets, you can paint some very similar pictures. Okay, so we did this like very small activity on a couple of traditional markets just because I'm aware of the structure of some of them. But if we're to look at crypto markets, we can essentially do exactly the same thing, okay? And I think that one of the biggest takeaways from what we've discussed on stream tonight is utilize the text on a chart, right? Like, just add a text box in and stick in the information that you are looking for from a higher time frame perspective, because once you come back to that chart, that's going to be such helpful information to help you pick back up where you left off with your original analysis. And that goes some way to helping you overcome a potential lack of patience on swing trades. So when we've got these swing trade positions that we'd like to take, or we want to see how long we can hold a position for, having this higher time frame picture built up will give you a very quick overview of what you're looking for and a quick recollection of, oh shit, yeah, on Link I was waiting for a dip down into 170 before I bought it. And then it will constantly give you that reminder. Okay, how long have we been streaming for? An hour and 20? Okay, so any questions that anybody's had on anything that we've covered off tonight? We'll keep an eye on BTC while we look at that. Fucking Tomo, piece of shit. So any questions on anything that we've covered off tonight, then I will get around to answering them. I'll leave us on BTC and just cycle through a couple of the crypto charts as we're chilling for the last 10 minutes. So I'll give you guys sort of 10 minutes or so to get any questions in. And feel free, even if you don't want to discuss anything that we've covered off tonight, then if you've got any questions on anything in general, then just shoot them into chat and we'll cover them off now while we're just hanging around here. Much green across the markets, look. You got some time to talk about your trader story, how you started, what makes you begin to profit, and when did you feel comfortable going full time? Yeah, sure. So I started trading 10 years ago. I started trading at university. In my second year of university, I started trading. I was a former poker player prior to that, so I played poker for 4 years and was basically just about to go full-time in poker. And then my dad passed away in 2010. So that kind of put a bit of the brakes on things in terms of university and pursuing poker as a full-time occupation. So I basically traded casually throughout the years at university, and what I loved about trading and stemmed from poker is that I love the ability to make money based on your decisions. So any decisions that I made as a result of me reading a situation would secure me money, right? And that was a very powerful sort of psychological loop for me in my head. I was like, I want a job where I can get paid for the decisions I make and the way that I assess something, which is what poker gave me, but then also what I found out that trading would give me. So when I first started off, I was basically just using trading as a way of gambling money. So I was basically just entering positions, like scalp positions, basically, and I was just entering long or short depending on what I thought that the asset would do. And it was primarily based off like visuals. It was basically based off like, I'd look at this and I'd say, okay, this has sold off a lot, surely it has to go back up now. So I was basically like flipping a coin and just kind of gambling through trading. But I kind of fell in love with the fact that I was watching this happen live. So it became like a sports event to me. You know, I'd be sitting here watching it, and this winning or losing money would be happening right in front of me. You know, I would be sitting here and I'd be like, this candle would be going up and my profit would go up. And so like, it just became this like sports event that I became a little bit obsessed with. I carried on trading casually, and I'm somebody who I'm an all or nothing person. Like if I want to learn about something, then I will put my heart and soul into learning every single thing about it. Right? I don't just want to know something, I want to be the best at something. I don't just want to know the basics, like give me the full details of everything I can possibly know on this subject. So I started to just begin absorbing as much trading information as I could, and I completed my degree. I got my degree. I went out and I got a job. I worked in my field for a little over 3 years, and then started my own business. So I started a business in 2015. So started a business then, and then basically ran the business for 2 years. It was very successful. It was a good business. What kind of business? So my background is basically all in education. So my background is corporate education. So I basically designed online training solutions for major corporate companies as an independent business. So I basically spent those years working with, and I'll start name dropping clients, right? So working with Google, Amazon, DHL, Facebook, McDonald's. So I basically worked to develop training solutions for their staff. So how they could train their staff en masse at the cheapest possible cost. So I basically spent that time in business, educating, being an educator, writing training material. So like all of my background comes from, and that's what I did straight after university as well. I just took a couple of years of actually working in the field before I went and created my own personal business from it. And essentially all through this time, I continued to trade and just improve as a trader. Up until the point that I was making like relatively good gains from trading, and I'd hit a point probably about 3.5 years ago, 3 years ago maybe, where I really felt as though I had overcome my bad habits in trading. So I really feel as though I'd reached a point where I wasn't making mistakes anymore. I was essentially becoming like super robotic. And in a weird way, it sounds weird to say, but in a weird way, I probably like fell out of love with trading because I was so systematic about it. Right? Whereas before I would look at this sort of price action now on BTC and I'd be like, oh shit, like this is cool. Like we can see that there's lots of buyers here and prices come down a lot over the last hour. And whereas actually like when I hit that point, I didn't give a shit. I was just like, okay, yeah, I can't enter a position here. There's no setup opportunity for me. On to the next asset, done. Like I just became like so ruthlessly systematic with what I was doing that like I lost all of the narrative spin around the way I'd look at charts. And that was kind of a really big breakthrough moment for me. It was only when I stopped and looked back and realized that I was kind of doing the things I wanted to do, but I was kind of just doing it automatically now without sitting there and thinking about it. I was just cutting through price action with my thought process and system. I spent the vast majority of my time that I've spent trading has been on equities markets. So it is primarily as a stock trader. It's primarily where my education came from. And then around 2.5 years ago, I made the decision that I wanted to stop running the business. I wanted to just trade full time because I knew that what I was doing was profitable. I knew that I had the right mindset to implement it now. And I knew that I wanted to get a break away from like the corporate monotony of running the business. And I've said this before, but then the really difficult thing came from the fact that I had to tell like my wife, my mum, family, friends that I wanted to stop a successful business and take on a venture that I couldn't hand on heart say was going to be a complete success, right? But I knew that that's what I wanted to do. I knew that's where my passion was in doing that. But I couldn't hand on heart say like, yeah, everything's going to be fine. Like we're going to be good. But yeah, it took pulled the trigger and leapt into it. Started off like relatively slowly. Like I planned myself out relatively well. I basically decided that I would start with 10k capital, so £10,000 capital, so like probably around $13,000. I had additional money available, right? I had money behind me. That wasn't everything that I had. It was a percentage of what I had, but I decided that if I could start with £10,000 and build a full-time trading career from that £10,000, then essentially I'd proven to myself that I could probably do it without over-investing or getting into a mindset where I'm like, I've got a lot of money behind me, so I can afford to go crazy on these positions early on because I'll just reload the account if things go wrong. I kind of said to myself, like, I've got money to support myself if I'm not profitable over the next sort of 6 or 12 months. But at the same time, I've also got this £10,000 that I want to grow and live on. So that's the approach that I'm going to take through this. And pleased to say that I've never had to reload that. I didn't have to reload that account once. And that account forms the basis of what I trade from full time as my bankroll where we are now. So Christ, did I speak for like 10 minutes about my story? I'm surprised I didn't lose more viewers. But yeah, that's essentially the background to where I've come from. The heaviness did not affect your trading, no, because again, like I'd been trading for so long now. I'd been trading for so long that I'd become so systematic in it that I think the best way to describe it, Draft, is like money had lost relevance. So it purely like every time I look at my accounts and every time I look at my positions, it's simply money on screen, right? It's simply numbers on screen. So like it didn't really have an effect on me, and knowing that like that was like I planned it out well, right? So I had money behind me. Okay, so I knew it wasn't sort of hand to mouth. I knew that I didn't have to make the next scalp trade, otherwise I wasn't eating this month. Right, it was simply a case of like I've got money behind me, but I can trade as I would usually trade. And I'd been through a long process to get there. You know, I'd been applying Renko principles for like day in, day out for 12 months, like non-stop, like just constant Renko over and over again, like just kept on doing it. So I knew that what I was doing was profitable. I knew that I would experience times that weren't as profitable. But all in all, I traded like purely without emotion and purely traded what I saw. But all I was doing was allowing myself to become 100% focused all day, every day to doing it, versus only being focused 100% at night when I could get a break away from business responsibilities. I hate to say I did reload such bankroll accounts in the past months. The journal video triggered me and hit me pretty hard. Why did it hit you hard today, Jimmy? Yeah, it's weird. It's weird to talk about when I think about it now after I just sort of said it all out loud. I think that part to me about like falling out of love with trading. Like I think I summed that up to myself really well. Because it simply became a Like, I have this thing where previously I used to wake up in the mornings and I was really excited to check what action had happened overnight. So especially on commodity markets, I was really excited to see what had happened during like an Asia session while I was asleep. And every morning when I was doing the business stuff, I would have a coffee and I'd watch price, right? I would sit and I'd come in, I'd watch price, and I'd catch up on everything that had happened. And like it became part of like this routine. It was like watching a show in the morning. Like whenever my wife gets up and she does her hair and makeup in the morning, she always watches a show at the same time on her phone. And it was kind of the same for me, right? I'd have my coffee and my show would be the commodity market in the morning. And I kind of fell out of love with that. But what I mean by it is that I didn't care what the movements were anymore. I didn't care what had happened. It wasn't some big surprise to me, or like, holy shit, like gold's down 1.7% this morning. Like it just became null and void information. All that mattered is when I would sit down and look at a screen, Renko told me I could enter a position or it didn't. Like I didn't really care anymore about what happened. So I feel as though I kind of summed that up, and that was quite nice to say out loud. Okay, I mismanaged. Yeah, okay. And again, Jimmy, like I would look at these things as opportunities. And I've said this before, okay? Like whenever something like this happens to you, where you may acknowledge that that you've made a fuck up, right? That you've lost a bit more money than you wanted to, that you've run an account down and you wish you didn't do that, right? Don't ever spend time focusing on, I wish I'd never done that. Why did I do that? I'm an idiot for doing that. Why did I enter that position? Why did I double down on that position? Right? Forget everything. Absolutely everything. Forget it. Sort out your finances. And when you're ready to trade again, feel excited about a new opportunity. That's one of the things that like I always looked at when I'd hit milestones in my account in the same way. Right? But essentially what you're doing is you are looking forward to starting a new venture. So if you fucked up in the past, like wake up tomorrow morning, clean slate, get your rules sorted, get your journal sorted, get your risk management sorted, and treat it as like a new exciting adventure. So if you've got like an account with $5,000 in and your aim is to grow that to 10,000, then put that down as one of your goals for 2020 is to grow your account, is to double your account. All right, so sit down, map that out, and then get excited about that. Forget about what you've done previously. Be excited about what you've got coming up and the way that you can make sure, and I've said this before in one-to-one training, right, is the feelings that you feel at the moment that you fuck up and that you make a mistake, okay? Write those feelings down in a book, in your journal, wherever it may be. Write down exactly how you feel. Like you feel useless, you feel worthless, you feel like you're not learning anything. And the next time you go to do what you did that put you in that position, read your journal. Read your journal about how you felt back to yourself. And I can guarantee it will make you think twice about doing what you're about to do. And I'm sure you guys have felt it before. When you enter that spiral, that downward spiral where you're like, I've got an account with $2,000. I entered way too big a position and I lost $500. So now I'm down to $1,500. And then I got really pissed off because I'd lost $500. So I entered another trade and now I'm down at $500. And because I've only got $500 left, I'm now just going to fucking chuck that on the next trade because I don't give a shit about this anymore. And then you lose that 500 and you're broke, right? So if you've ever been through that situation where you've basically just snowballed an account down to zero because you've had just frustration after frustration and poor trade after poor trade, the feeling that you feel at the end of doing that, once all of the red mist settles and you feel calm again, right? Write that feeling down. And the next time that you feel yourself going on that spiral, then take a look at how you felt the first, second, or third time that you did that. And I guarantee you it will stop a meltdown position like that. So I did this when, so as I increased my account size, I obviously increased my position size as a result. Okay, so in order to continue snowballing the account, as I reached certain milestones, I would increase the size of the positions in my account. The second time I did that, okay, I had a fuck up where I went too big on a position, and I knew what my limit was, but I was feeling particularly confident. Okay, I was trading really well. I just hit this new milestone of swapping to an increased position size. I was feeling really good about my trading, and I fucked up. Right, I went way too hard, and what happened is because I went way too hard. Okay, the next trade I put on, I convinced myself that was just a mistake, but actually I still know this trade's right, so I'm going to re-enter it anyway. Okay, and I fucked up again. And then what happened is I basically dropped back down to the previous position sizes that I was taking prior to taking the step up. And it was one of the first times that I felt like a true failure in what I was doing, because I'd forgotten about the fact I'd already taken one step up. Okay, and this was my second step up in position size. So I'd forgotten about my first success because all I cared about was fucking up this time. So what I did was I made a note in my journal that basically were my exact feelings of how I felt about fucking my opportunity of stepping up and increasing my position size and having to drop back down again because I made two very poor decisions. But I always remember doing that. Right, like even now, just talking about it, right, I remember those feelings that I felt having fucked up. And even though I wasn't broke, right, that had a big impact on me as a trader. Because I knew I'd made fundamental errors and I knew I was making them as I was doing them. But I didn't have that ability to stop myself. But ever since I remember that day and those feelings and that entry in the journal to say, this is how you felt on this day when you took a step back in your trading career because you fucked up twice. And so that was a really important point for me. Like, again, a really important point on feelings and allowing a very real memory of those feelings to influence your future actions. And nobody likes writing down mistakes. Nobody likes writing when they fucked up. But it's important that you do so, because otherwise you'll just put it to the back of your mind and you'll just find yourself doing it time and time again because you don't really take it seriously. But if you actually sit there and take the time to write out exactly why you felt that way and how you felt, then again, it will be a far better reminder to you. Draft, I think you should reshare this stream in the Discord and tell them this stream is damn good and you guys should watch it. I appreciate that, and I will definitely do that. I know that, like, we've weirdly taken this this detour. I think it was an hour and 17 minutes. You were like, tell me about your life. And for the next half an hour, we've just been down that road. But I hope you guys are taking some value from the lessons I have. Interestingly, I was looking at one of the one-to-one students shared a post today with Jacob. Jacob Canfield, and it was basically a post on him saying it will take you 2 years to become a profitable trader, right? It will take you 2 years to become profitable in trading. And he kind of said to me, I've been working with you for 6 weeks, right? And like, that seems like I've got a hell of a long way to go until I become profitable. And the difference is, right? And this is kind of in no way me selling what goes on in the group or my influence here. But what you guys are doing that I never did is you're actively taking steps with good sources in order to improve earlier. So the fact that I can have this conversation with you as a full-time trader about the ways that I fucked up, right? It kind of helps you to speed up your process because you're taking active steps to better yourselves as traders, to learn things, to learn the discipline, to learn different approaches, to learn the right ways to track your trades, assess your trades. So you're kind of speeding up your process. And I said the same thing to him. You know, it's like I never took any of these steps that you guys are taking. There wasn't really the same level of kind of community when I first started. And the fact that, you know, like all of you guys, like I watch you guys in Discord, and even if I'm not chatting and I just load up the Discord to see what's going on, like the fact that so many of you guys are assisting each other in terms of answers to questions, pointing towards resources, discussing of charts, like is a huge, huge bonus on all of your learning. Right? Like Draft, I know shares a lot of charts in Serious Charts. Right? Like all of that constant sharing and learning, you're in a position where you are accelerating your learning process at a far quicker speed than I could. But I think that the other thing that all of you guys are probably quite happy to admit you still need to improve on are things like the psychology and the discipline around trading, right? You probably need less assistance when it comes to how to assess a chart, right? Some of you still really like that, but some of you will think, well, actually, I can assess a chart, but actually I know my discipline or my psychology isn't right just yet, but I'm working on it. Yeah. So the trading rules are so simple, right? So simple, but so effective. The trading rules are crazy effective. So here, at my office, before it was changed around, right? I had a whiteboard there, and on the whiteboard were my Renko rules. So they're my exact rules for entry and exit of trades. And I just had it on a whiteboard in the room. And so they were there constantly, all day, every day, what my rules are for entering a trade. And it's such a simple thing. Yet for some reason, nobody really thinks about it. But we all trade in this way, right? We all have a preference on what we look for when we're trading, like whether or not that's support or resistance, divergences, supply and demand, like EMA crosses. Like, we all have some basis in our head of what we like to trade from and when we'll take a trade. But for some reason, we don't ever write it down and create a discipline rule set from it. So that's kind of what I was trying to encourage you guys to try and do. I needed to live by those as I really want to scalp only the high probability plays. Yeah, and that's exactly it. Right, live by the rules, grade your setups, and then wait for your premium setups. And again, if you have a checklist next to every one of your trades, so let me, and I'm sure they won't mind this, but one sec, I'll show you an example here. Okay, so I'll quickly just show you a screenshot of this. So this is a checklist from somebody that I work with on a one-to-one basis. Okay, and again, I'm sure they won't mind me showing this. But this is essentially on every single trade that this person now completes, right? They have this, which are their rules. And for every single trade, they put a mark in here on whether or not this trade has fulfilled what their trading rules are. And so that then they can go back to that trade and say, okay, well, this hit 4 of the 6. I'm happy with this, and I took the trade, and here's the result. But every time there is a full assessment criteria that is in play. So again, like, this is a really nice way of doing it, is just by having this checklist, because it forces you to go through this one by one and to mark it off. For scalping purely BTC on Renko, what would be the best set of rules in order to play the high probability scalps? Yeah, so your couple of points there are fine. Like, you can slim those down though, right? So if you're looking for high probability plays, and it's easier if I write this down. It's easier if I write this down because it helps me to go through the thought process in my own head. So one is AO hitting extremes. So Jimmy, when I say AO hitting extremes, right, I mean the very tops and bottoms. Okay, so when we see the awesome oscillator, can you just fucking load that in a different... Jesus Christ. All right. So when I say the extremes, okay, one good way of determining this is if you zoom out on the AO, right, we're referring to like this is the extreme down here. So any moves that are down in this region at -2, you can see here, Okay, compared to this region, I'm talking about extremes. So I'm talking about any time that we are seeing the AO reach the very ends here and the very highs up here. Okay, so it's basically on like Apple here. It's anything that falls around 10 here is an extreme, and anything that is around the minus 10 area here is an extreme. Okay, so that's the first one in here. Will this just load up my format? Yeah, good. Okay, so the first one is AO hitting extremes. No, you didn't, Reki. You're all good. AO hitting the extremes. 2 is divergence created as a result. 3. And actually, you can just turn these. You can turn these into questions, Ricky, if you just want to hit the. So you just say, "Is AO hitting extremes?" Question. Has a divergence been created as a result? Question. What is the trend? Actually, we can change that to, am I joining or going against the trend? What is price doing? Okay, so like something like this, right, is a pretty good starting rule set. Okay, and then you can expand on that. So, pleasure, son. Get some rest. So, is the AO hitting the extremes? Has a divergence been created as a result? Am I joining or going against the trend? We can change that there to say lower time frame. What is price doing in relation to the hull? Is it over or under? And then what is the higher time frame trend? Am I joining it? Right, so then you start to get a list of rules here. So the AO is hitting the extreme, tick. Has a divergence been created? Yes, it has, tick. Am I joining or going against the lower time frame trend? I'm joining it. That's good. What is price doing in relation to the hull? Is it over or under? Again, it depends on your setup to whether or not this is a good thing. And then what's the higher time frame trend? Am I joining it? Okay, so that will give you a nice base of what to look for. And then again, if like your AO's hitting the extremes, your divergence has been created, but you're going against the lower time frame trend. Okay, you've got good interaction with the hull and you're going against the higher time frame trend. Then you need to assess that in terms of maybe taking a 75% position size instead of 100% position size because you haven't ticked all of your boxes. Okay, so you want to manage your position a little bit better. And again, if the trend is up and we're taking a short position, then obviously what we want to do is try and reduce our position size to ensure we can deal with the fact we are going counter trend. And then in the same regard, Jimmy, and this is just more information piling in here, is if the lower time frame trend is up but the higher time frame trend is down and we are joining a downtrend, okay, we're joining in short and this is the higher time frame, then that carries more value than 0.3. So if we're joining the higher time frame trend, that is more powerful than joining the lower time frame trend. So if we have a cross here, but we have a tick here, okay, then this is a stronger yes marker than this would be. Okay, cool. Well, that was an extra 40 minutes that I didn't plan for. I appreciate it, Draft. Not a problem at all. So let's wrap up there. Jimmy, have you got this information? Are you okay if I delete this? Okay, cool. So BTC looks like we're getting some sort of lower time frame recovery here, which is going to feed some bulls. So thank you very much, everybody, for joining me tonight. Appreciate you sticking around. We had really good viewing numbers tonight, and really good viewing numbers all the way through a 2-hour stream, which again is a huge credit to you guys for hanging around and listening for so long. So thank you very much for spending a couple of hours with me and chatting, learning, contributing. Cool, thank you, Nocoin. So I appreciate all of the effort that you guys have put in tonight as well, in terms of helping this go a lot smoother for me, because it would be really awkward if it was just me talking to no responses but 20 viewers. So again, I appreciate that, and I will be online again tomorrow. I've got swimming with Baby Schiller tomorrow, so I'll pretty much be on from the US market open at 2:30. I will be live trading, so I'll be around in the Discord at the same time. So I'll catch you guys in the morning and then primarily in the afternoon. Thank you again, guys, and have a good rest of the evening.